Today was a pretty wild day for AMC, but I had a good time. I have the daily chart pulled up right now. You can see that the cloud is just hanging out over the top of that chart, but the price is below it, which is bearish. Volume today was a little higher than it was in the last trading session on Friday. The RSI did come down just a little bit and implied volatility did rise. You can see it was a green day, but the close today was below the close on Friday. So is it really bullish? I think it might actually be kind of bullish. Whoa, I know, right? Like, bear with me, but here we go. Bear with me. Okay, so the pink zone, or the fuchsia zone, as Exo and I are gonna call it, it's a big level. If the price can enter here and the markets are heading down, then I think the price is gonna jump across it. However, we did not see that happen, not today. Instead, SPY and IWM both went lower and then bounced. AMC followed suit, and that was pretty much to be expected. I'm gonna go into the 1 minute chart now. We'll talk about what my day trades were. Yes, the day was green. Yes, I did buy puts. No, I did not lose money. And there actually is an asterisk there when I say that, because I had entered into a couple of different contracts and I went and took a nap on my lunch, 20 minutes. And sure enough, the stop limit order I had set to help secure gains and prevent losses didn't fill because of how fast the price moved and how tight the stop and then the limit were. So that was super annoying. I woke up, I looked over, I was like, oh my God, I had to go there, I saw the put. So I actually took a $5 loss on that contract, which is so stupid because I wanted to secure like $10 of gains, but instead I lost $5, which is fine because I made $17 on this other contract I traded. But still, let's be honest, why lose money if you don't have to? This $4 contract I bought, this is a trash put, just in case, you know, the price does tank. I do that sometimes, just like it's $4. I'm willing to lose the $4, which means I probably am gonna lose it. Nonetheless, today I did have a green day. I'm gonna zoom into the beginning of the trading day. We'll talk about what happened. So the price did come down and then it found a nice level of support at 1483, kind of a weird spot, but that's where it is. And you can see that we have a lot of levels of horizontal support and resistance now stacking up. And this is why I keep saying that the longer the downtrend lasts, the harder it's going to be to get back up above these levels, because look at all these layers of resistance we're building. It's a lot. And this is just from the last trading week too. So we did dump today and we're just spinning on this downward trend. You can see that I have this red dashed line. This goes back sometime last week. I believe it's the trend that started with the identical crows, the 3 red days there that had a pretty bearish target. I think we've reached the target for that candlestick pattern if you're looking at that. But the price today just loved that downtrend. It came up and we had a couple of different tests of that $15 level, just above 15, and it's just crazy. Look, 1, 2, 3, 4, 5, 6. Then it just and this was a lot of fun. I was feeling really good here because I had purchased 3 different contracts, of course. The 1550 put, this was a great contract. It's $167, which is a lot of money, but as my account grows, I am going to be able to afford these more expensive contracts that perform better. And this, I was planning on holding until tomorrow and then selling it for a profit and then taking those profits immediately that same day and turning them into different contracts to try to increase those gains. But that didn't turn out. I did have to sell them, which was unfortunate. This $15 put did make me money today as well. I sold that towards the bottom. And I feel pretty good about that too. I'll show you where I exited that put right here. You can see the price came crashing down into that 1470 level. And this was nuts. I was feeling great. I was set up. I was ready to go. But as soon as that second green candle showed up, I said, you know what? I'm out of here. When the RSI starts moving sideways, look at how grindy the RSI is right here. The price isn't moving, and sure enough it wasn't. And there's just no way that you're going to break through that level. Look what implied volatility did though. Implied volatility jumped like mad. That's crazy. What were we at? We were at like 134 and we rose all the way up to 142. We almost had like a 10% rise, almost a 10% rise in implied volatility on the intraday chart. Nuts. That's nuts. Sure enough, the price did pop back up and tested well, this was it formed a new downtrend. See, this downtrend didn't look like this at the time. At the time of that little bump, the downtrend was back here, so it looked like a breakout. But I wasn't surprised to see that the price turned around on this longer term trend line. Nonetheless, once that new low came in of 1461, that pushed this downtrend out so that the price wouldn't be crossed by it, and that's where our corrective wave begun. I took a nap. I was like, you know what, I'm out, peace. And then I woke up over here to see this rising. I was like, why am I still holding this put? And so I got out of it as soon as I could, and I'm glad I did because the price continued to rise into the close. I want to zoom in really quickly. 1461 here. Where have we seen 1461? Where have we seen that price? Let me show you exactly where we've seen that price. Are you ready? Drum roll, please. I could actually cue that in, I guess, but like, what's the point? I think it's this one. Ooh, you can see that there's a right angle descending, broadening. It should be formation with a target of 1461, and today the low is exactly there. So let's zoom out and have a look at that pattern and review what we have. Yeah, here we go. This is my new favorite chart right now. You can see I had some expectations for the day, and I drew those out so that I could talk about them. I went and watched Saturday's video and Sunday's video just to get an idea of what I was looking for and what actually happened. It's good to do that. I was expecting a drop down and a test of that level, and then I said, hey, we're gonna see what happens to this downtrend, because this is really the moment of decision. It's not necessarily how far we go, it's when we bounce, how high do we bounce? If the bullish reversal fails, that's going to signal bearish continuation. And what did we see today? We saw the bounce, which was expected, and then this downtrend pulled the price down, and this was really bearish. And there was a moment here where if the price were to move down, then that would have signaled an incredible decline, the one that I've been waiting for. However, that's not what happened. The price did pop, bounce back up above that trend, and now look, it looks bullish all of a sudden, right? This is a good launching point for a bullish reversal. It really is. I'm gonna turn on a different time frame really quick. I'm gonna go to the 1 hour, see what this looks like, and maybe I can find a actually blank chart. That's interesting. What's that blue line? Oh yeah, I was trying to figure out if there wasn't a pattern here that I could draw that would incorporate everything from that last sharp decline. And I kind of thought like an ascending, broadening wedge would be a good pattern, maybe right there with that wick coming out the top. But, you know, the price target for this kind of a pattern is just the bottom, right? And we've kind of already, I mean, we're basically gotten there. There is undoubtedly some sort of internal trend line here, level of support that has come back into play. The price is, you know, bouncing up. But look, here's the thing. Those are pipe bottoms. That's a great example of pipe bottoms. Let's talk about pipes. Yeah, let's do that. Let's go look at pipes. These are picture perfect pipes. Pipes don't usually show up so perfectly. So picturesque. So pipe bottoms, and this is on a 15-minute chart. So just be wary that on a different time frame, this is also a pipe bottom, but you can see the price failed and went lower, but you know, we have a new set of pipes. He says that pipe bottoms are okay performers in a bull market when performance is measured on the weekly scale. However, compare against other patterns on the same scale, they place last. Pipes have a small break-even failure rate and high average rise. Interesting. And actually, Bulkowski was the one who discovered this pattern in 1998. So yeah, pipe bottoms, you know, if they're not on the weekly time frame and if you're not in the bull market, I don't know. Doesn't sound like they're very good. And as you can see, you know, if 15 minutes here, so if I took, you know, 4 hours here and here, I bet you there's something like pipes in there. Let's have a look. Nope, it's just one big candle because of the time lapse. That's okay. Nonetheless, today was not as bearish as I thought it would be, and that is an important thing to realize, because moving into tomorrow, I don't want to be buying puts in the morning if there's a chance of potential reversal. You can see that the SPY didn't come down as low as I thought it would. I thought 397 was a good spot to find that bottom. It actually bottomed near 405, which I guess isn't too bad given that we closed at 412. So yeah, we got about halfway there. I mean, that's bullish. To not reach a bearish price target is bullish. And you can see here that the volume is pretty good too. I'm gonna go look at the IWM. I thought the IWM looked a little more bearish than the SPY did, and it seems like that's a more bullish reversal. It really is. But you know, not closing above the prior day's candle ranges is still not great. This is not a 4-hour chart. Let's try on the daily. Yeah. So this is still bearish. It's still looking bearish. I mean, yeah, that looks like a great reversal candle, doesn't it? But so did this. And the volume's comparable. Really, I don't think anyone knows what's going on. I think that the markets are kind of floundering. What are people supposed to expect? I mean, look at this. This is a high volume. This could be a high volume bottom, and naturally you expect to see a pop here. The RSI, I mean, this is looking good. We have, let's see. So the tricky thing about finding divergence on the RSI is you're looking for closes, right? Not tails or wicks. So there's a close there, and let's see if we got a higher low on that. Or lower low. Okay, we got a marginally lower low, and we got a marginally higher low. This is bullish divergence. To see the price having fallen further and now is coming back up, you know, this, yeah, I'm not kidding. This looks like it could be, as Ron Walker calls it, a counter trend rally, and that makes sense. And what that would mean for AMC is also a rally, and I've taken some time to try to figure out what that would look like. Pull up my default charts. I'm gonna pull my indicators down, blow up my price here, and let's have a look. So I think the VTOP is done. I was hoping to see the VTOP come down to 1290, but it seems like that descending triangle target was really the beginning of that pattern, and that descending triangle is formed back here. This was a while ago. Tim Sketchy's first a lot. So this breakout downward did reach its target and it bounced there a bunch. And during this time I said, I'm not gonna day trade. And then the price ripped and I was like, oh, I wish I was day trading. And as the price started going back down, somewhere around here, I said, you know what, I'm gonna start day trading again. I'm pretty sure this is gonna come all the way back down. And it did. And now it's time to ask what's next, because obviously this thing is over and we're moving into a new pattern and it looks like a counter trend rally is due. So I'm expecting some sort of triangle or wedge to come. That would make the most sense to me. So what do I think? I don't know. I drew a symmetrical triangle. This is so speculative. This is not what chart patterns are about, but whatever, here we go. I thought that a return to a significant level of horizontal support and resistance would be important. So as to $17 or $19 would make sense to me. And I thought that would look good in a consolidation pattern of some sort before a break downward. And I still say break downward because we still have some pretty bearish targets from this massive bear flag here, right? And you know, it's possible that we could see a failed bottoming pattern before that target's actualized. It's also possible we see the price come back up for a while. But I don't want to go there yet. I think we're just going to go into a counter trend rally before we see some more downside, because the RSI is not looking good. This is still bearish. The bears are still generally in charge here. Implied volatility is going up on the daily too. Yeah, I mean, a small counter trend rally, that would be good. Probably the implied volatility would drop a little bit, which I wouldn't like, but it would form a higher low as the price continues to decline towards the end of that pattern. I mean, I think that the Fed is really going to make the decision about which way the market's going to go. I really do. So looking at this chart and seeing that I just happened to draw a double test of a horizontal level of support and resistance, that made me think about price mirrors, and here we have this weird double top thing, and I said, oh my goodness, I need to keep this up here so I remember. I think, you know, this would drive me nuts, but that would also make a lot of sense. But if the price were to return to something like $19, and then start mirroring what it's previously done, and maybe it doesn't come as high that second time, and that's our warning sign that the bear market's going to continue here. I think that makes sense. Something like that. Price could come higher at that point, you know, something to make people get their hopes up before crashing down. It'd be like, oh look, double bottom, you know, or it could be just an ABC correction down, or weird bullish Gartley or bat, which have ironically been kind of bearish. At least the one that I found back here was. So that's what I have for today's video. It was a really weird day trading, but I do have a green day on the board, which is good, because if I was playing puts on a day of bullish reversal and I came out okay, that's good. And also, I think that moving into tomorrow, I don't know what I'm going to be doing. I really don't. Sitting on the sidelines and waiting is perfectly legitimate way to trade. Trading too much is a good way to lose money. I know that. So what time am I at? About 14 minutes. Okay, this is way too long. I'm trying to talk way too fast, but these are my thoughts currently, so I'm out.